All right, everybody, good morning to my American friends, North and South. Hope everybody had a good weekend and is gearing up for a great Christmas. Yesterday was the shortest day of the year in the Northern Hemisphere. Good metaphor for the Bitcoin price action where we are right now. It's going to be a fairly short stream today, just the basics again. Reminding you, as always, that some good stuff is coming. A lot of you have asked about getting more chart access, and I'm here to please. So sometime in the first quarter of next year, it's coming. Let's look at where we are. This is as of the solstice yesterday. Bit down from October. People are very excited right here. Quite the slide. You see the daily revenue, of course, slides with the price. All right. So miners were doing $50 million days in October, and now they're doing $40 million days or less. Okay. That's total miners per day. So the question is going to be, are we, this is 30-day now. Let's take the noise off of the daily. Is basically what we're experiencing now going to be kind of the tail end of what happened here in 2021 into 2022, or the tail end of here, 2017 into 2018, or since we've had such a wild ride with, the ordinals, the BRC20s, inscriptions, the halving, I have no idea if this worked, but I just came back on. This is what happens when you try to run AI code in the background of your streams. Anybody still hanging out? Anybody still able to see me? The day's not going to be this short. Might actually be working again. Kudos to you. Kudos to you if you if you hung in there. Thank you, Afonso. Hi, Kurt. Days are getting longer. Days are getting longer. That's what happens when you try to code in the background with your same Python scripts. Okay, so again, quick one here. Let's just try to answer the question of, is this drop in revenue about to look like, you know, the rest of the cycles, even here? Okay. Figured the way we'd do that today would be the PSR, which is here, which is we take the market cap divided by the smoothest revenue stream, which is here. And it's here. If you look here, I won't take the tooltip, but you know, you can see this multiple peaked here, February, March 2021. And we went through, you know, a boom, a bust, sorry, a boom, a bust, a boom, and then another bust. Basically for over a year before this thing really rattled out and bottomed around the 10th percentile, okay, which is right here. All right, let's look at it from 2017's perspective. Much cleaner, although if you look closely, there were plenty of worries, right? But a nice clean top and then straight down. Where are we now? Well, we're back to the trend line. Like I said, this is a hard market to call, but you know, coming back to the trend line from being in a secular bull is usually not a great sign. Right, when we come off of it and then sort of test the trend line or go around it, right? I'm looking here. Then it's okay. But when we start to go back down to it, it's a real big question mark, right? Because in 2017, we crashed right through it. And in 2021, we did have this weird sort of bounce scam top. The real top was really in March based on all the indicators. And then down. (2013) also had two tops, which actually did look like two legitimate tops based on this indicator. But yeah, I'm not saying everything's rolling over, right? Not trying to give the fear thumbnails like they do in YouTube, but not looking great here. Remember, the price has nothing to do with the bands. Bands are here. it's hard to call, because if this really is, you know, the peak in the revenue and then goes down, it would, just sort of match other cyclical things. However, um, other cyclical times, I should say, right? Because this number 3 has always basically peaked at the end of each cycle. However, this has been such a choppy bull, basically, with real high revenue for miners a year and a half ago, and lower highs, but still not lower highs and lower lows, just kind of rebuilding up again. It's possible we keep going, we keep chopping higher. But I would say, based on this, you don't like to see this start to roll over. Because when it has rolled over, it can go down for a while until it finds a base. Well, I guess miners probably care, but one way or another, as we're past the winter solstice, I'm getting close to capitulating on the 4-year cycles being in. Because we either extend this and grind higher, or we actually roll over and this was the cycle. I said for a long time that I thought this was the best sign that 4-year cycles were in fact done, that there are no more 4-year cycles. Because it would just seem extremely odd for Bitcoin to, have its bubble burst by the same exact level of miner revenue that happened in the last cycle. But that's exactly where we are. A measly $17 billion a year, while our gold bug friends are getting close to $400 billion a year in miner revenue. We're rolling over at 17. So, day by day here, I think we're just going to have to see how things go in January, February, March, April, May. No, I'm just kidding. I mean, pretty pivotal next couple months, I'd say, because if this little dip sort of actually fully turns around, then we're good. But if it's sort of just pauses, maybe a little bit on some sort of a dead cat bounce or something, and then further goes down, then we'd have to find a new bottom. Interestingly, so let's take this off. This is a little bit confusing because this is the smoothed trend, but this is the trend over time, the wiggly lines. And as Bitcoin was coming from, nothing here, like a $100 million market cap or something, and the price was, 200, then went down, then went 6 times higher in the same year, you were able to keep above the trend line. That is the power trend of the price to sales ratio. When 2021 occurred, so 2017, yeah, we actually had that kind of occurred 3 times in a mini fashion, but really, other than the SegWit anxiety, which fully resolved here in August, and I guess fully in November. But most of it was settled already in August. Pretty clear bubble here, or boom. Look, when this trend line starts to go back down below, sorry, when the PSR, this indicator starts to go back down below the trend line, it typically does mean we're on a, rebalancing period, consolidation. Getting close. Doesn't mean we can't bounce above it and go much higher. It doesn't mean I'm bearish about Bitcoin 5 years from now, but this is the bull market zone, right? Anytime that this indicator, that is the market cap, gets this far extended above revenue for miners, it's a bull market zone. And if it comes out of it, typically it means not in a bull market anymore. So we have some time. January, February, I think it'll become clear. But if this revenue doesn't really come back strong and really show that, okay, this is just a temporary respite, demand for Bitcoin strong, whatever the narrative is, we could have to test another low next year in all these metrics. Here's just a straight up quantile. Drifting lower. I know the price is actually higher than this level, but yeah, but I'm wondering how much to really move us back into that, secular uptrend. Look, history never repeats, right? So, just rhymes. I completely agree. We could be, just all thrown for a loop here and boom next year to 250K. Would totally make sense according to the regression, right? Regression is 125 by the year end. Anything is possible, and according to the risk of the curve, we're just dipping into this really low territory. Let's go ahead and look at the last time we hit the 20th. I mean, it was like dark times. End of 2022, SBF was bailing everybody out without any money. End of 2022. We dropped below the power curve. Fun fact, by the way, the power curve at this time was about there. It was right about the level where it dipped below, meaning it was higher in 2017. But anyway, we hit the 20th percentile there. And of course, crypto winter, whatever. So it seems extremely, extremely cheap. Can always get cheaper. I'll say it again, we're going to have really good charts for you guys. I think you will be excited with it on my site soon enough. Here's Bitcoin versus the S&P. All right, so I mean, just chopping along, just like gold, just like silver. All right, you can overlay the AI trade here as Magnificent 8 makes up 80% of the S&P or whatever the crazy numbers are lately. I don't remember exactly, maybe it's 60%, but Bitcoin just can't get any cheaper in terms of stocks, gold, or silver. It is enjoyable, of course, that Bitcoin keeps trading while the markets go on holiday, gold included. Let's show you this again. All right, at $4,000 gold, remember, we basically double the power curve because of this, right? So we're 3 times under we're 3 times under the gold trend, okay? So that means if we got back to the gold trend, you would be at, 80,000, 90,000 times 3, roughly. 250, 300K. Dollar power trend, of course, is 125K. So from all these regression metrics, Bitcoin looks super cheap and looks very good. I am hesitant, though, to you guys all know my caveats anyway. I'm not trying to sell you Bitcoin, not trying to sell you hopium. Just more comfort about where we are, but I do think this chart continues to look pretty soft. If it bounces and we stay in this sort of Goldilocks zone above the actual trend line of the PSR, then it'll be all right for a while. But I like this ratio a lot because there's really no denying, where price goes. You go below the black line here, and you're into bear territory. Sometimes that means price will significantly deflate by the time you realized it, right? So $20,000 Bitcoin mid-December had this little dead cat bounce in February. All right, so it kind of faked people out right at the trend line of the power curve, right? Is right there. And then you're not fully below it until April. Lo and behold, that's, $7,000 Bitcoin. So it's not like Bitcoin gives you a chance with some of this stuff. You could argue you had 2 chances here, but again, from this point, January 2022, 4-year cycle had ended. We're below the trend line for the PSR, and then you just have to set in that new bottom before you start building again. And I've said this before, this does seem more like a 2017 cycle, which again, that's also why I thought we might have some surprising blow off top and keep the 4-year cycle and all the rest. But Bitcoin is not asking for permission, right? Just does what it does. So it was a nice long cycle here in 2016 and 2017. Whereas here you can argue we've had that. It was even stronger pumps. But this is sort of do or die, I'd say. I'm pretty sure everybody watching this stream would take these prices any day as far as buying and believe that Bitcoin can easily go to 125 or 250 or 300, like I said, be 2 times the multiple of, put us back in the historical ratio of Bitcoin gold, which is here, which is 65 ounces of gold per Bitcoin. All of us believe that can happen. But the data is coming in pretty weak. On this solstice. Hey, Joe. I've heard of that. I'll get that on there as well. I'm gonna have good charting availability for all you guys, so you don't have to always listen to me get on YouTube. What? If it's just a donation or whatever, that guy seemed to be everywhere, so. What a joke the whole thing is, huh? You mean Bitcoin dollar card? I mean, Bitcoin gold couldn't seem more damaged. That's what's so wild about where we are. Same with stocks. Literally new lows every day. Bitcoin has not been this cheap statistically, ever, from the perspective of an equity holder. And as you know, with falling knives, I mean, you just have to wait and see until we set the bottom. Can't really tell on this chart. We're setting new lows almost every day. Kind of bumping up along this, it's actually 0.0001 percentile trend because you can't do zero. But I will say, for as low as it is against gold, as low as it is against stocks, that is kind of bearish. I'm sorry, that as low as it is, that is kind of potentially bullish signal. But there's a lot of people that are buying gold and AI right now. Yeah. Yeah, a lot going on at 95K. Yeah. Yeah. We had some good comments on that from Stephen Perno in particular. He gave a few. Let me pull it up. Um, let me pull it up. I'm not going to read all through it, but Stephen's very, very good. Money or debt. Um, MIT grad. Why can't I see it here? Is this somehow lost in a different thread? Sorry, guys. What's going on here? It seems to show up on my phone. In any event, The point was, yeah. Well, we haven't gotten above the 80th percentile. Right, we have gone below the other way. And actually, I don't think I have that one updated because I was just pulling work on that in the back end. Sorry. You see how good I am with continuous streams or continuity on the show here, but let me check. I don't think that's going to work. Yeah, I got to pull it up again. In any event, you know, the reason, or at least what I'm finding, and other people should run it as well to check, but, you know, when you go back in time, you can get hundreds of millions, billions of sats per dollar. And that's it's really a more precise measurement of Bitcoin, but it's volatile. And when we have it in dollar terms, right, not the inverse, not sats per dollar, you don't see that really at all. You might see 0.001 cent or 0.0005 cents, but the precision seems less crazy. So that's essentially what happens. And the R squared is worse anyway, right? So I can't say that I'm, you know, convinced that's the best chart to use anymore, but yeah, unfortunately I can't show you it right now because I don't have the stuff ready and I've been running code in the background, which is why the stream dropped earlier, but we'll get it back. Yeah, it's good to just keep checking. Keep checking where we are. And yeah, well, interestingly, based on those percentiles, we had some this was itself kind of a boom territory. Right here and right here. Even though you don't see it on this side, in the sats per dollar, it manifests itself. Well, even there, I'm wondering, you know, like I keep saying, you know, we have this governor of sats per dollar, uh, dollars per Bitcoin, and then gold ounces per Bitcoin, silver ounces per Bitcoin, or S&P per Bitcoin. I mean, it's so cheap right now. So it's, you know, it's this idea of we have like a governor, different things to sort of keep us in check. And with, I think the strongest one is gold Bitcoin, Bitcoin gold. So how many ounces of gold per one Bitcoin? And I could see this grinding along at 20 ounces, to be honest. I could see that for a long time in a bear market, but I cannot see, you know, just this continual discount. Because look here, right? This was, let's say it's the 10th, right? Just this little point here, which we didn't hit the zero with, but just this point here in 2022 was, just lasted a month in December 2022. And that's where that line is now, way higher, way more optimistic. So this is where I really ponder being too bearish, because we have this sort of governor that is the gold ounce price per Bitcoin, or the gold ounces per Bitcoin, the Bitcoin price in gold. I always mix that stuff up. But interesting, competing narratives, right? I mean, revenue's weak. Price based on miner revenue is weak. And, if this rolls over, it typically rolls over for a long time. Never said it would be easy, right? Yep, very good point. TV. Bitcoin scarcity competes for demand with other assets. Prices emerge as a consequence of scarcity interacting with demand. Prices will fluctuate, scarcity won't. Good old economics at the end of the day. I'm very curious how the gold market will play itself out. Because, as I've said, higher prices bring around a lot of jokers in the gold market. They can bring around a lot of jokers in the Bitcoin market too. But this is basically what Bitcoin's up against. You talk about competing with other assets. It is a seminal year for the old gold bugs. That's 30-day or rolling month miner revenue. $13 billion a month. Back when we had $2,000 gold in 2011. Now, $4,000 gold with more gold coming out of the ground equates to $40 billion a month. But that, as they say, cure for high prices is high prices. So you're going to have more gold flood the market. People wondering why they're paying so much for this gold when it's so plentiful from all these miners bringing on these old projects. And then prices equilibrate. Bitcoin, of course, doesn't have that problem, so to say problem, because we have the same amount of Bitcoins coming out every 10 minutes, but we still have the price fluctuation, as you say, even if we have a set amount of Bitcoins every 10 minutes. Oil market's pretty wild. Yeah, and gold bugs too, by the way. Although, let's be fair, Gio, there's plenty of, I think about the dollar price. I'm definitely a hodler still think about it. But the unique thing with Bitcoin is a lot of these miners hodl. They do hodl. They even lever up, borrow money they don't have to mine and then hodl further. So quite a bit different. Gold market has much more hedging. More derivatives, which inevitably will come to Bitcoin too, but gold miners are not trying to really keep the gold on their balance sheet. Certainly not behaving like strategy. They just want to sell the gold that they mine for a profit. It's a good Christmas for them. This is a tough one for me. I mean, honestly, I have a hard time seeing Bitcoin get too much cheaper in gold terms. Maybe some central banks will trade in some of their gold bars for Bitcoin. Everybody knows what Bitcoin can do. Most people that are somewhat close to the market know about the power curve. They see how it improves over time. So I have to say, yeah, it's a conundrum. Yeah. So again, the S&P itself is an exponential curve, but when you layer on Bitcoin, it's power at a pretty good R squared. But yeah, I do, everybody's wondering how Bitcoin will react in a down market, if this really is a down market because of, the circle jerk of consulting projects from one, um, magnificent 8 company to another regarding AI. and it really is a bubble, and it pops, maybe some of that value goes right back into Bitcoin. And then everything I cautioned about at the beginning of the video is completely moot, because this was just a temporary blip in the sort of coolness of this multiple. We go back up, and and that's it. This is just a slight blip, and we go not to 20 billion a year, but 40, 50, 100 billion a year, and start to really get into the level that gold is doing now, which is on a yearly basis $400 billion, just shy of it. We know Bitcoin's going there, right? We know Bitcoin's getting up to $100 billion a year in miner revenue, 200 billion, massive market. It's not going to happen overnight, just a question of when. But I would tend to have my doubts that it would happen this cycle. Although again, I could be wrong. But the fact that it is so cheap right now in terms of gold makes me think that perhaps the run is not over yet. So maybe you can hear some commotion in the background. Family stuff for me, guys. I can't stick around, unfortunately. Sorry about the issues at the beginning, but good stuff coming. Merry Christmas. I'll do another show tomorrow. Merry Christmas again. Happy holidays to everybody. Happy Hanukkah, Kwanzaa, whatever. Appreciate y'all. Thank you for watching. Let's just keep calm, carry on, and enjoy the power curve. Happy solstice as well. All right, guys. Have a good day. To my North and South American friends, take care.